Hi everyone, welcome to another Wisdom update. Well, it's finally happened. Australia gets to enjoy an interest rate reduction. Today, the Reserve Bank came out and they reduced the official cash rate by 0.25% to 4.1%. It's been a whole 5 years since we've actually seen an interest rate reduction in Australia. And I know all of you are thinking, well, what does that actually mean? Is it significant, or how significant is it? And what does it mean for the future? Well, look, the truth is, if you look at it in isolation, one single rate reduction of 0.25 is not actually that significant. How it impacts people is that for every $100,000 that you owe, you'll now be saving about $20 a month in interest. Now, $20 a month, let's be honest, is not that significant. The fact that we don't have to pay any interest is obviously a good thing, but is it going to cause people to go out there and make different decisions, or is it going to have a significant impact in the property market? Well, probably not. Certainly not in isolation. We would need to see a few more rate reductions before people, really feel it and really notice it in their household budgets and in their daily living. The other implication for it is obviously with the reduction in interest rate, it does mean that people can borrow more money. So on that front, a 0.25 reduction in interest rate essentially means that most people with a $100,000 income could now borrow about $20,000 more. So for each $100,000 that you make, you could borrow an additional $20,000. Now, again, is that going to make a significant difference in the property market in isolation? Again, probably not. We'd probably need to see a few more interest rate reductions, and that really pushing on or increasing people's ability to borrow. And, we would see that play out in the market. But where I do think that this is quite significant is the psychology. If you think about the journey that we've been on, we've obviously been, a period of really low interest rates for an extended period of time leading in to the first interest rate increase that we saw. And then, of course, we had 13 interest rate increases beyond that. And so when you consider it, one reduction against 13 increases, again, in isolation is not that significant. But I do think it plays out significantly in psychology. When you've had low interest rates, then you've obviously copped significant increase in interest rate, a significantly larger interest bill, and particularly when you combine that with the fact that Australia has been through a lot of inflation and cost of living has increased substantially. I think there's a couple of psychology differences that happen in that journey. There's one when it's increasing and people are thinking, well, stuff is just getting more and more expensive as time goes on, and that factors into confidence. And then I think there's a bit of a change, and we've been in this change for a period of time now, where, they come out and they say, well, look, we're not expecting the interest rates are going to have to increase any further. And I think that's the first psychological difference where, okay, now stuff in the future, other than inflation, of course, is not likely to get more expensive. And I think that's a different psychology than when it's increasing and potentially will get more expensive. But now how I think it's going to play out in psychology and as a result of that confidence is that we're actually on a decreasing trajectory. And so now I think that people are thinking, that things are going to get cheaper in the future, not necessarily from an inflation perspective, but of course that is now much more under control than it was. But even when it comes to house buying and home buying, the fact that the interest rates are likely to get cheaper in the future and their total bills are likely to get cheaper in the future, I think plays out a lot in confidence. And I do think that that is not going to have an inconsequential effect, so some level of significant effect when it comes to buyer psychology in the property market. Now, what will really get some traction behind that, of course, is if we see further rate reductions. And unfortunately, I don't think we're likely to see that in the near term. I think the Reserve Bank will be really conservative now that they've done the reduction. They'll want to see some more data. They'll want to see how that plays out in the marketplace before they make further reductions. But I do think that this is going to speak a lot into, consumer confidence, buyer confidence, and the property market in general. Any way that we cut it, an interest rate reduction is great news. I think it will certainly underpin and continue to support the growth that we're seeing across multiple markets. I think in the markets that have been performing negatively, we're talking about probably specifically the likes of Darwin and Melbourne in recent times. I do think that we may start to see an end to that reduction in price there, and it will flatline and potentially even pick up a little bit in those markets. And again, it's a really good thing generally. So on the day that we get the reduction, all I can say is let's celebrate this. Let's appreciate the fact that we're paying less in interest as investors, that we've got an increased borrowing capacity as investors as well, and enjoy it, because unfortunately these things are spread a long way apart and we don't get them quite as much as we'd like to. That's it for me on this subject until we get a further rate reduction or anything else substantial changes. Until next time, happy investing and bye.